Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, April the 13th, 2017. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we look at our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses in order to have a trade plan in place for whatever the market shows us. We do not know what the market's going to do, but we can create a plan and have it in place and then determine what the market is doing and then execute the plan that best suits what the market is doing. A couple announcements. First of all, this is a holiday weekend coming up. So very important to understand that you have to treat today like a Friday. There will be no Globex tonight for the Friday Globex. The market will close at 5 o'clock tonight, and it will not, that's Eastern time, and it will not reopen until Sunday at 6 p.m. Eastern time. So trade it tight. We also have some news that we have to be, some headline news. Apparently China, or North Korea I should say, is threatening to blow up a nuclear bomb. So we got to watch for that type of headline news today. In terms of disclaimers, this is a subscription room, so if you're interested in checking us out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are not for education purposes. I said are for education purposes. Please trade your own due diligence, your own trade plan, and your own risk metrics. Hold on one second. Sorry about that. I just got this nasty cough that won't go away. So taking a look at the news. We did have news at 8:30. We had Canadian manufacturing sales came out minus 0.2, which was a beat. We had Canadian NHPI, which was also a beat, 0.4 versus 0.2. Then we had United States PPI came out at 0.1 versus 0.0. Unemployment claims came out better than expected, 234 versus 242. Basically the same we were previous. And then core PPI came out at 0.0 versus 0.2. So I mean the news itself was not bad. We didn't hardly move anywhere in anything. 9:30 we've got Great Britain CV leading index, and then 10 o'clock we've got preliminary University of Michigan consumer sentiment and inflation's expectations, and then we have the Bank of Canada Governor Pelosi speaking at 10:30, and natural gas. It's a bank holiday in New Zealand and Australia today. And then tomorrow, even though it's a holiday, why is this not moving? Oh, what is going on? Well, my news is there's some news out tomorrow, but okay, something's going on with my internet. I still have it, but obviously I have a problem with that website. One second. See if it's just my connection. All right, something's wrong with the Forex Factory website. Okay, so each morning I like to start my day with a simple candlestick chart. I start with the monthly and I work my way through on the daily. I've got a new moving average that I just popped up in here, and the only reason I'm putting it on is because of the fact that on the daily we've now closed below the 50 SMA daily. But in terms of my regular moving averages, all my charts have a 9 EMA and a 20 SMA. I use that to gauge the strength of the trend, where the trend is being challenged. On the monthly, we've got a beautiful multi-year upward trend there at the end of 15, beginning of 16. They challenged that trend, took it back in 16, had this falling three continuation pattern, got the continuation, and so far in 2017, the trend has continued, but in March we had our first negative month. So far, our open of the month is 23.5750, and we're currently trading below it right now. So we are seeing a little bit of weakness, but we have not violated the one-time framing up on the monthly yet. We don't even begin to challenge the trend until we get into the 2260 area. Going to the week. We did have one-time framing up and good slope and separation, strong trend, and then we had the one-time framing, broken in the first week of March, and then they came down and closed the technical gap, and now they're below the 9 EMA. So we are seeing some weakness in, and I'd be watching this low right here for the longer time frame, the low at the 23.1750 area, but right now we're seeing some weakness. We've tested our key line in the sand overnight down at the 23.32 1/4. A move down to the 20 SMA will take us down into the 23.07 or 23.0650 area. So the trend is being challenged on the weekly. Going to the daily, you see that we have started a downward trend. We're below, this is the first close that we've had below the daily 50 moving average until going all the way back to the election day of November the 8th. So we are seeing, and this is the reason why I've got this on here is not because I'm going to execute on a 50 moving average daily. It's because it's psychological to a lot of traders. And a lot of traders are going to see this close yesterday as a serious bit of weakness, okay, and why we've seen continuation of the weakness coming in overnight, because people are starting to get scared that this market could turn, and we're now below the 9, the 20, and the 50. We don't have really good separation yet, so the strength of the trend is not there, but we are challenging this recent low down here at the 33 1/4 and broke it overnight and put a new low in on the daily at 32 1/4. Going to the 4-hour, you can see that this trend accelerates, okay, in the last couple trading sessions. We've rolled over. We've got good slope, good separation to the downside, and every time we've tried to get back above the 9, we failed, and we're getting continuation down. Going to the 1 hour, you can see the same thing. Tried to get above the 9 and the 20, failed here, get the continuation pattern. We just tried to get above the 9 again, and we failed. So the strength of the trend is still to the downside on the 1 hour. On the 30-minute, same thing. We had the news come out. We put in a little Mr. Sneaky, tried to get back above the 9, came up, tested the 20, and failed both, and we're back below the 9 and the 20. We're going to be actually closing in a gap. Opening in a gap this morning if we stay below yesterday's low of 37.50, and you can see the strength of the trend. Now there are a couple naked crosses above us that I want you to pay attention to, because if we can get above the 37, there's one on the 30-minute right here at 39.75. Going to the 15-minute, you can see that we were trying to take the trend back, and we're failing right now. We do have another naked cross up here at 40.50, and then on the 5-minute, we have one below us down here at the 34. So we've got some unauctioned territory on both the 15, the 30, and the 5. But currently right now there is weakness coming in. We see if these buyers from the RTH are going to step in here again, and see we've got the overnight low down at 32 1/4. Going to the structure. So we have been in this balance, okay, that goes from the gap up day on February the 13th and just chopping around in a very wide balance. Then we had the breakdown day a couple Tuesdays ago, and we came down and tested this 23.19, and then the buyer stepped in yet again, came right back up into balance, chopped around, and the sellers kept stepping in at the 64.50 area and knocking us down. Now we tried to hold balance in around that 53 and that 40 area, and so far, we've now came down and we tested the lower side of that balance down at 32.75 and went just tipped below it, and then buyers came in. But we are outside of value on all the time frames. The bigger time frame value is this 37.75. There is a LVN, okay, at 37.50 from the overnight session. That's going to be our over-under line, okay, for the day. And then 32.25 is going to be our key line in the sand still for a couple different reasons. I'll get to that in just a minute. But for the first reason, of course, taking us outside of this distribution zone, we've actually created this double distribution zone with a lot of undetermined fair value. By no means do I think that this is finished auctioning, but we are seeing some weakness, and they did come down and test the lower side, and there's reason to believe that there could be some fear coming into the marketplace, and so we could dip down, and there's not much down here, okay, until we get back down into that 1975. This is a very thin area, so we could come down here and chop around here and start maturing the auction back here and take care of these gaps that we left open, okay, and then head back up into this area. I don't think we're done with the upside yet, but it would be we're running out of buyers, and when you run out of buyers, what do you have to do? You have to dip lower, and you have to advertise to the buyers, okay, and find where they're going to step in so that we can continue the auction up. So the key line in the sand is still going to be 32. I'm moving it down to 32.25 because it's the overnight low. It's also critical mass, and I'll talk about that in a minute for the week. And then 37.50 is going to be our over-under line, and above that we're looking for a move up into the 39 and 40 and 42 area, and basically this we have this undetermined fair value up here between 45, 42, 40, 39. I mean, it's just very messy. And then our key line above now shifts down, okay, to 23.48.50, because above 43.58, then we get back into this distribution zone, and I'd be looking to come into the bigger balance, okay, and the undetermined fair value in here between the 53.75 and the 59.50, and possibly even up into the 64. I don't think that's going to happen today, but anything can happen. Remember that it is a holiday today, so coming into I think the moves will be made early. I think the volume will get very light, and we could get holiday drift into the afternoon in the direction of the initial move. So taking a look at the overnight inventory is pretty much net negative. I'd say it's pretty much about 90% net negative. So again, we've got a double distribution overnight. Most of the night, the market stayed inside of that balance around the former Globex VPOC, which was up at the 23.40.50, and then we broke down once we got into the European session, okay, and the European session came down, created the double distribution. And where's the LVN? The LVN is right here at 37. I thought it was 37.50, but it's 37.25. The VWAP is 37.50. okay, and then we have that longer term microcomposite value area low at 37.75. So I'm using the 37s, okay, from 37 and a quarter up to 37.75 as my over underline. Above that, I'm targeting the 39 and the 40. And as long as we stay below it, then I'm targeting a move down to test this weak low. We did create a weak low down here in the 32s, 33 area. And I'd be looking for them to challenge that again and see if the buyers will step in the RTH to take us back up. If not, if they break, okay, then I'm targeting the 27.75, 28 area. So moving this over, setting up our trade chart. Our overnight high is up at 44. Our overnight low is down at 32 and a quarter. Okay, so the key line in the sand, okay, our overnight low. This is also critical mass, okay? What do I mean by that? This is our weekly critical mass. Our week open was 23.51.75. We have one trading day left, one trading session left, okay? And our average true range for the full session trading on a daily basis, the 20 period, is 1948. So if you take 23.51.75 and subtract the daily ATR, okay, our critical mass, which means if we get below the 32 and a quarter, it's less likely or less probable that we can have a positive or a bullish week. And a lot of times when that happens, especially on a holiday, is that the buyers will give up and they'll step aside and they'll capitulate. And then the sellers can take control and drift us down into, into a type of trend, just a slow grinding trend, okay, to the downside. There's no way we're likely to hit critical mass to the upside based on the daily ATR. So I don't have to worry about the critical mass up there. Our daily ATR, okay, is 1948. So off of the overnight high of 44, we have range capability to break through critical mass in the overnight low, okay, and start trending down towards this 2450 and test the weekly ATR downside target. Our 20 period weekly is running at 35.56. So, we still have range capability for the week down 27.75, and we have daily ATR, okay, capabilities down to 24.50. Our overnight VPOC is not likely to shift now that it's shifted down. I mean, there's one place it could shift up to, which is the 36, but right now it's down at 35. We still have 27 minutes to go, but right now I'm going to put it at 35. Our range low, okay, so our underline is going to be the 37, 37.50. What happens to be our range low? 37.50. So there is a lot going on right here. Okay, so this becomes our over underline. And it's really a range from 37 and a quarter up into 37.75. Above that, I would be targeting the 39.50. which is our value area low. And if we get back inside of value, okay, then we're clearly, and we don't need this anymore, so we can get rid of this. Oops. Then we're clearly coming back up into this distribution zone, okay, and I would be targeting this naked VPOC and naked close. Our close for the day yesterday was at 40.50. Our naked VPOC is 41. And I'd be looking for an 80% destination trade, okay, up to test the 45. Because remember that the 45 is part of our undetermined fair value. And yesterday, where we chopped, I mean, yesterday was just absolutely brutal chop, okay, with a very ugly profile, okay, between the 37.50 and the 45, and we just basically chopped through it the whole day. Above the 45, I'd be targeting the open from yesterday, RTH at 47, and then of course the 49.50, or even moving it down to the 48.50, and this becomes our key line in the sand above. And the reason I'm using this as a key line in the sand above and not the range high, okay, I'll be targeting the range high as my first target, but it's because of all of this up here. We have a lot of unfinished business that we left above us. You can see that this 53.50, we missed it on Tuesday, okay, and we left all of this up here. And we've got daily range capabilities up into the 51.50 area. So if we get above that key line in the sand and get into that distribution zone on the composite, then I don't think the range high is going to hold us. I think we'll push through and we'll drift back up into the 50 area and the 53 and come right back up into balance, okay, around the longer term, and the intermediate time frame between that 53.75 and 59.50. Do I think that it's less likely that that's going to happen? Yes, because we're breaking, okay, below some key levels. So my main hypothesis for the day is an open auction out of range, out of value. Always got to remember, anytime you open with a gap, okay, you've got to worry about a gap and go. Okay, so we have to worry about a drive or an open test drive, and those type of moves you don't want to try to fade. So I don't think we're going to get that. We're not that big of a gap, so I'm looking, and we could even come up and close, open up inside of range because we still have time to do that. But I'm looking for responsive buying, okay, on the open, pushing us up into that 39 to 40, 50 area. And then I'm going to be looking for sellers to step in somewhere between the 39.50 and the 42 area, and a rotation down, chop around at the 37.50, and a push down to test this 32, and with a late day probe down possibly to the 27 to 24. I don't think we're going to get a lot of range today, but I think we're going to see the day start to sell off, okay, as people leave for the weekend and we get into this direction, especially if we get below the overnight low and this critical mass and the key line in the sand. Hypo 2 is an open auction out of range, move down to test this 32, false break below it, and somewhere between the 32 and the 29, looking for responsive buying to step in and rotate us up, chop around between the 37.50 and the 39.50, and then push up into value and get an 80% destination trade and close somewhere up here between 45 and 42 with maybe a late day probe up into the 48 and testing the other side of that balance around this lower distribution. I just think it'll chop. Once we get back up in here, it'll just chop sideways into the close. Hypo 3 is an open test drive or an open drive. Failure to get back into range, a push down immediately to test the overnight low, take out the overnight low, push down into the 27, 29 area, chop there, and then push down through to the 24 and fail down into the 19 and close somewhere down here between the 19 and the 09.75 as a gap and go day. And then hypo 4, which was the least likely of my hypos, is an open auction. Leave the overnight low alone, push up, get an 80% destination trade, shop around here, push up, and break above the key line in the sand at 48 and come up and close somewhere up here in the 53 to 59.50 area. And those are my hypos for the day. Gold, well, gold is getting awfully close to that 1300. And we've had a big move. We now have a 42 and a half point rotation on our fractal rotation. This is generally a large rotation. You can see that, average rotations, on the bigger side range between 38 and 42. So we are reaching, for extension. That's not to say that you can't get bigger extension. There's a 48 here, and the thing we have to keep in mind is we've got a really big number above us, and we are trading only about $11 off of it. So I don't know if we can do it today. I'm thinking we're more likely to chop and stay in this upper distribution. The overnight VPOC is at 88.80, and we've been chopping around it, testing the lower side and the upper side. Our low is 84 or 85, 85.90. Our high is 90.70. I expect to test one of those sides, and I think it's going to be the upside, but I don't know. We're getting a little bit long in the tooth here on gold. Key line to watch is the 94.80. We get above 94.80. I would actually be looking for failure there to rotate back towards the 89. But if we break above it, then I'm thinking we're gonna test into the 1300 today. If we fail to get above that, I'm expecting more chop, and I'll be watching the 83.90 for failure for a bigger move down back down towards the 75s area, the 77 to 75 area. If that doesn't hold, I don't think that we're going to see below that, but if it doesn't hold, then we'll start making our way back down towards the composite. Now, I want to point something out to you, because this is something that I talked about back here when it happened, is the fact that our composite, this composite goes all the way back to 2008, October the 9th, 2008. And we had a composite shift, the VPOC, or the most traded price, shift from the 2170 up to the 54 last week. And I noted last week or the week before, but when we got back up here, the shift happened. And this is a perfect classic example of coming up, accepting price higher, and then continuing for price discovery up. They took long-term value and shifted to the high side, came up, they held it, and then what did they do? They go back into price discovery, up back into this auction, and this auction was very ugly. One thing to note also, we were talking about this last night, is this day right here. This is November the 9th. This was the results of the election. We spiked up to the 1347. We are now, the low of this is at 76.90. So we are back inside of that election night. This big wick is completely, really unauctioned. So if we get back into the 1300s, there's a lot of unauctioned territory, in this microcomposite right here. And the first big resistance is basically right at the value area high at the 1299.40, or call it 1300. Anyway, I got a little long in the tooth there talking. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.